There is now a 74% chance that the US will be getting a recession this year. And if Bitcoin can't hold the level that we will discuss in this video, it's going to get a whole lot worse. In today's video, we'll be discussing exactly that, going over the recent Bitcoin price action and also discussing the very important data points as it pertains to how the stocks are performing and how the economy is looking. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. To kick us off, recession risk surges as GDP contracts. Kalshi, which is a betting market, now shows a 74% chance of a US recession this year, spiking after this morning's surprise GDP print. And what was the print? Negative 0.3% compared to the expected 0.3%. This is extremely problematic. We also had core PCE coming out at around 3.5%, the employment costs, which were in line with expectations, around 0.9%, and consumer spending is now at 1.8% annualized. The markets are reacting sharply, stocks are down, hitting session lows. And if we take a look at the stock market here, we can see that the Dow Jones is down 1.23%, the S&P 500 down 1.5%, and the NASDAQ down just under 2%. Taking a look at Bitcoin, which is what we're here for, as we can see, entering this all-important region, it looks like we are about to get rejected. Now, you'll remember me saying there is a very important level that we need to hold as support, or else it could get a lot worse. And that level is right here, right around $91,800, because as I've been discussing in my previous videos, it coincides with the top of the bull market support band, which is actually in a bit of a downtrend, and it coincides with the all-important level that we held as support as Bitcoin went ahead and put in an all-time high back in January. So this is exactly what you want to be looking for in terms of a support level. If we can't hold this level as support, in my opinion, Bitcoin will be going much lower. And this data that just came out today would only support that. If we take a look at a little bit of a more detailed chart here, what we can see is that we're still bouncing around this crucial zone, but ultimately until we can confirm above $96,000 and most importantly above the top of this range, which is where we initially broke down from, I would not be considering going long. We need to hold this level as support. Now, in terms of a swing trade, what you'd want to look for here is actually holding 91.8K as support if you would like to go long. But in my opinion, as I've been sharing across my videos, I have very much been favoring shorts in the market, and continuing to get rejected here would be a perfect signal for a short. Now, if you want to trade this market, I would highly recommend that you sign up to Weeks, which is the first link in my description down below. With my link, you can earn a 20% deposit bonus. That means that if you trade with, say, $10,000, you would get $2,000 back for free for your trading. And all you need is an email and a password to sign up. Now, back to the Bitcoin chart, these are the key levels that you want to look at. And I don't think that you need to overcomplicate it. This is not an environment where you want to open huge trades, because I would personally be waiting for confirmation. Of course, not financial advice. You can do whatever you'd like to do, but this is a very important level for us to break. And if we can't break it, we will be going much lower, especially if we just slice through 91.8K. And a little bit of a more detailed view of the stock market, we can see here that the daily candle is currently red, as we covered earlier, but keep in mind that this could potentially act as a support level that I've been looking at for a while here. It would be right around this region actually. So if we can hold here as support, it may actually be positive. But what I'm looking at here is also the 200-day moving average. For me, that is the all-important level for the stock market. If we can break above the 200-day moving average, which is sitting right below 57.50, that is crucial, and we would likely be moving much higher. If we take a look at the monthly time frame, that is not that bad of a candle for the S&P 500. As we could see, we dumped pretty low only to get bought up. Now, if this candle can turn green by the time the month ends, which is just in under 24 hours, it would be ultimately very positive. I wouldn't be surprised though if we at least retest the bull market support band for the S&P 500 and the 200-day moving average. But as we went over in some previous videos, we saw that last time we broke below the 200-day moving average, let me just go on the daily chart here. We saw that last time we broke below, it took a while for us to be able to get enough fuel to go ahead and move higher. As we can see here, back in 2022, at the beginning of the year, we pumped back above the 200-day moving average right around this zone, came back down, then we kept on getting rejected from the bull market support band, got another pump all the way up to the 200-day moving average, only to move lower. If we get this kind of price action for stocks, it will most certainly not be positive for Bitcoin. But right now, at the time of recording this video, it looks like we are getting rejected. That being said, as I discussed in my previous video, I don't think it's as easy as us just shooting down or exploding to the upside here. I do think that we will continue to chop around this zone to get rejected. And as I discussed, there could also be some nasty wicks to the upside to shake the traders out. Now, speaking of the traders, I want to go over once again the Bitcoin exchange liquidation map. And as we can see here, there are more and more shorts starting to pile into the market, which is positive if you want to be bullish. Because last time we looked at this chart, there was only around $2 billion worth of short liquidations compared to the $13 billion worth of long liquidations. As we can see here, the market is still very much longing, and if we make it all the way down to $83,000, there will be just over $14 billion of longs liquidated. But on the other side, as the price continues to drop, more and more people are piling into shorts, and we can see that we are now just below $6 billion in cumulative short liquidation leverage, which could be found all the way at $105,000 if we were to pump that high. Now, just to be perfectly clear, that is not my base case, but when this chart starts evening out, it's a great opportunity to potentially shift your stance. And so if, for example, a lot of people start piling into shorts, it could potentially be a good opportunity to go long and go against what the market is doing. And it wouldn't be another video without talking about some of Trump's most recent comments. He came out and said that it will take a while for the economy to get accustomed to these tariffs, and he said that we need to be patient. He also came out and said, this is Biden's stock market, not Trump's. And here are his full detailed comments from his Truth Social platform. This is Biden's stock market, not Trump's. I didn't take over until January 20th. Tariffs will soon start kicking in, and companies are starting to move into the USA in record numbers. Our country will boom, but we will have to get rid of the Biden overhang. This will take a while, has nothing to do with tariffs, only that he left us with bad numbers. But when the boom begins, it will be like no other. Be patient. But if we scroll back here, Trump made a remark like this in the opposite direction while Biden was president. This is the Trump stock market because my polls against Biden are so good that investors are projecting that I will win, and that will drive the market up. Everything else is terrible. Watch the Middle East, and record-setting inflation has already taken its toll. Make America great again. You can't have both. So as you can see here, he's taking credit for the previous stock market, but also doesn't want to acknowledge that what's happening now is any of his responsibility. And his last comments today were that tariffs will soon start kicking in. Now this gets reported because as soon as he talks loudly and proudly about tariffs, the markets typically do not react well to that. And as we can see now, Bitcoin is sitting just below $94,000, still chopping around, but it is starting to show those early signs of rejection. So make sure that you're managing your risk accordingly, because this is most certainly not an easy market to be trading. And the last thing that we need to touch on is, of course, Bitcoin dominance. We just got a brand new cycle high. Altcoins are continuing to get wrecked against Bitcoin. Now, I'm not saying that any given altcoin can't outperform Bitcoin, but the reality is over the course of many months, that will simply not be the case. And so if you're new to crypto, I would still highly recommend that you look into Bitcoin first, because it gives you the highest risk-adjusted returns until monetary policy changes. As we've been discussing on the channel, we've been tracking Bitcoin dominance for quite a while now, and I firmly believe that we can make it above 66%. Now, if Bitcoin dominance were to go that high and hold it as support, it is entirely possible that we make it above 70%. But right now we are already at cycle highs, and I will make sure to keep you updated on how this develops and how it can impact the altcoin market. And that sums up today's quick video. Stocks are down and crypto is down with the negative GDP reading, so you need to be aware of that. And also, Trump continues to make some new remarks regarding this tariff nonsense. If you enjoy the content, make sure to smash that like button and subscribe. I will make sure to keep you updated on how things develop, and I'll see you in tomorrow's video.